This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack, but with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
Good afternoon and welcome to Haystack Help Radio. Special edition of Your Money Matters today on a beautiful, beautiful day in the Mile High City. Kind of just daydream, Kurt, looking out the window there.
Well, I mean, this whole week is in the 70s. It's like, why are we working? We should have a recording on here.
Yeah, we should
be out doing something else.
We should have done a golf show. Absolutely.
Be out on, hole number 5 or something.
Absolutely. And our show is Your Money Matters, brought to you by that voice of Mr. Kurt Rogers from Affordable Interest Mortgage. Your one-stop shop, I like to say, for all of your mortgage needs. 720-895-0500, AImortgage.net. So, Kurt, let's talk a little mortgage, and then we'll get to our guest today, Mr. Pope. But we hear a lot of terms in the mortgage world. One, jumbo loan. What does that mean?
Jumbo loan is a loan. Fannie Mae and Freddie Mac will come out every year, and they'll have 80% of the loans are for the year. And that number is consistently rising. It was 398 with the 417 and the 424. They now have a thing called a high balance. So anything over that high balance figure, which is 493, 350, is classified as a jumbo. And before I go too long, I got to mention this because I didn't say it earlier. You almost shaved. You kind of cut it all off. It was looking really scruffy and mountain man-ish.
I did, and I'm actually going to my elk hunt this weekend where I wanted that look. You can't go out there looking like an insurance salesman or something all clean shaven. So I had it going. But I bought this new razor. I had 2 or 3 little attachments, and I started to use the wrong one, and it took a dip.
I was wondering because
and then I tried to took another dip, and then finally I had to bring it a little closer.
Yesterday it was looking real mountain man.
I thought that was great. I know. So
anyhow, to get back to the jumbo, I just had to tell you that because I'm like, where'd it go?
I know, me too.
Anything over 493, 350 is a jumbo loan, and it used to be that there was only a small percentage of the folks doing that, but that's not the case now. But that's what a jumbo loan is.
Mm-hmm. Okay.
Jumbo loans are not. They're completely different loans than conforming loans, and they don't have to meet all of those regulations. So, and with the average home price now close to 470, 480, any loan amount that's above 493, 350 is going to be classified as jumbo.
Okay.
And right now, I think it is in Denver that about 40% of the homes that have sold this year are over $500,000. So it's almost becoming an average price. So how do you look at that?
Mm-hmm.
Because now you're into the jumbos. There's a lot of different ways to address that issue. If you're above 424, at 424 or below, you're going to get your best rate.
Okay.
That's where everybody kind of hones in. That's your Fannie Mae conforming loan limit. There's different ways of going about doing it. If you're buying a house for $550 or $600 or $650, our recommendation, or at least a thought to show you, is to do 2 loans together. Because one, you're able to put more money down. Let's say you only want to put 10% down on a $600,000 loan. Well, that's a loan amount of $540, but you want to be down to $424. So you get a second mortgage for about $116. Now all of a sudden you're at 75% loan to value. Your rate's going to get even better, and your payment on the 2 is cheaper than your payment on the 1, even if you don't have mortgage insurance. So there's other ways to skin that cat.
Okay.
But what's changed lately in the jumbo market is because there's so many homes out there, the banks are now coming out with jumbo loans at real close to the same rate as conforming loans. They're even going to 95% loan to value on a jumbo loan. 95% without mortgage insurance.
Right. Now, we've talked here lately a lot about the VA kind of loans. Are those, can they do jumbo loans as well, VA, or are those done any different?
VA's always been able to do jumbo loans. Their only difference is they'll do 100% loan to value up to the 493. Once you cross that number, they will go 75 cents on the dollar. So if your home is now $593, they're going to require you to bring $25,000. But up to $493, they do 100% at the same rate. So whether it's a $593,000 loan or a $700,000 loan, you're getting the same rate as if it was a $200,000 loan. So VA's been doing that for a long time, which one of the reasons it makes VA loans very attractive, because there's no mortgage insurance. They have the lowest rates in the industry right now. No points, no fees. I mean, they're really very attractive loans, either on a refinance or on a purchase.
Gotcha. Again, give Kurt a call. His crew will help you out. 720-895-0500. Make sure you ask about the asset manager loan as well. We won't take that time today. Maybe we can hit it before the end of the show, but I'm telling you, that's a great loan. Not for everybody, but it may be for you. And that's a super deal. So ask Kurt about that when you call. 720-895-0500. Once again, their website, aimortgage.net. Well, glad to welcome back in studio, returning guest, Mr. Adam Pope. How are you, sir?
Doing well. Thank you for having me back.
Good to see you.
Good to see you.
And when Adam is here, we talk about credit. Now, nothing in the news about credit
nothing.
Credit reports or Equifax or any of that. But
Equa
wow.
who? Equa.
Yeah. Equa out of business if they don't watch. Yeah. So let's talk about that when we talk about a data breach. And we hear that with a lot of different companies. I mean, Target had one a year or so ago that was supposed to be a real big one and all that.
IRS had one.
What are we really talking about when we talk about, that data breach?
So the reason this one's making so much more news and why it's more significant than others, you hear, like you said, you hear about them all the time. There's, it's something more and more prevalent. In 2012, there was 471 data breaches. Last year, 1,091. And this year in 2017, there's already been 1,080. So this happens a lot. But why is this one so much more significant? Because of the data that's actually been breached. Because, with your Target card or whatever getting breached, they have access to your name and your credit card number. Mm-hmm. This one is so significant because they were able to get name, social, date of birth, and driver's license number, the main items that the bureaus have.
Important information.
So those are,
the core ingredients.
Exactly. Yeah, for identity theft, that's exactly right, the core ingredients. And so that's why it's making so much news. On the flip side of that, 145.5 million names were involved in this breach. That's almost half the U.S. population. It's about 3/4 of all consumers that actually have a credit report available. So there's a large number. It doesn't mean necessarily that something is going to happen. Mm-hmm. Just sort of put your alert on status.
Now, with that breach, it's like you just said, it's not that something's going to happen today. They can store that information, and they can wait 6 months to a year to where you start to get comfortable. And then they can start bringing that up. And what are some of the different ways they can use that information to obtain credit?
Those are the three main factors, right? And you can apply for credit over the phone. I'm sure you get it all the time.
Yep.
You can apply for credit cards online, and they have all this key information now. And so that's going to make it a lot easier for them to be able to do that. And you made a great point. And a lot of people think, 3, 4, 5, 6 months down the road, everything should fizzle over. It won't be mainstream news anymore. But your info was still out there, right? None of this info changed. You can go cancel your credit card. Mm-hmm. You can't go change your social, your name, your date of birth, et cetera, right? So it's going to be there. But like I said, there's different options and stuff out there for folks to help protect themselves and just keep a little peace of mind.
By the way,
I was going to say, tell us a couple of those options. Because they're asking me all the time. And
right.
I always refer them to you anyhow. But what are some of those options?
The one you hear most often about, obviously, is the credit freeze. And that's where you go to the bureaus, you actually lock up your report, nobody can pull it. It just cannot be accessed. Kurt would go in to pull someone's mortgage, boom, it returns blank information, and then we get codes on the back end of our system that'll say this has been frozen by the consumer. If you know you're shopping for a mortgage or an auto loan or anything really, you're gonna be putting more onto your plate by putting a credit freeze. There's no safer option than putting a credit freeze. I don't want to discourage anybody from doing it, but to lift those freezes oftentimes costs money. It all varies state by state, so I'm going to be very vague here. But it will cost money. It'll cost money to lift the freeze temporarily, put it back on, etc. Even permanently unfreeze it, if you will. But you need to do it in order. If you're going to get a mortgage, there's no way to keep that freeze on there. So you're going to have to come to grips with, I got to lift this for a while. If you're a consumer not in the market for anything, sure, put the freeze on, and it eliminates anyone from being able to access it. There are a couple, all three of the bureaus have come out. The system itself has just been antiquated for years. I mean, you have to obtain this private PIN to release to companies like ours so we can access the bureaus and return it. And it's a big hassle in addition to just the monetary. But now they're coming of age a little bit, and have online services that gives the consumer control. They could just go in with the click of a button, lock, unlock. And so that makes it a little bit more user-friendly nowadays.
By the way, we are on Facebook Live. Go to Haystack Help Radio. Cassie's here running our Facebook page. If you've got any questions about credit, mortgages, whatever, we'll open up our phone lines as well, 303-477-5600, or send us a question through Facebook, and Cassie will let us know about that, and we will try to answer your questions, because a lot of people get fed up with credit stuff. Do you think these bureaus, and there's three main ones, Equifax,
Experian, and
TransUnion, are they working as designed in your mind?
Yes. I mean, to this point, just the amount of data that they have, no one else could match. It'd be difficult to come in and compete. I think the biggest thing right now, competition-wise, is the score. So FICO, Fair Isaacs Company, is their own separate entity, and they're just obtaining this data from these three bureaus and coming up with the score. And that's the big, in our world right now, that's the big push from CFPB, pushing down, getting more competitive in that marketplace to get the score, because the score is what's eliminating people from being qualified or needing it updated, et cetera. And the scoring models they use, that we use in the mortgage world, are pretty antiquated. I mean, they're 2004, 2005 models, because they're a little more conservative than the scores nowadays. The bureaus themselves are trying to get Vantage Score up and going, and that's a different company that's owned by the three of them jointly, which is good because it brings competition to the scoring world, but it also is honing more into those three companies overall. Mm-hmm. So is that better? I don't know. I mean, the data that these guys have is fine. They're starting to clean it up a little bit more, make sure it's a little more careful. There's the whole change of the liens and judgments back over the summer. I mean, it could be improved like anything else, but if you eliminated them, you'd be opening yourself to a whole world of hurt, I think.
Sure. Yeah, it wouldn't work if you didn't have some form of a system. The system's not perfect. Right. I want to go back to the freeze. Mm-hmm. Equifax is the one that had the breach.
Correct.
Freezing Equifax freezes Equifax only. I get questions about, okay, should I freeze the other one?
Right.
Well, if they have the information and you're pulling up the other two, it almost makes sense that you want to freeze all three.
That's a good point, yes. So, because most creditors, I mean, in the mortgage world specifically, we typically pull a tri-merge report. So you'll get all three. So you'll get a frozen notice on at least one of them, and you'll have to address it. In all other aspects of life, even if that creditor, say an auto loan, reports to all three bureaus, they're typically just polling one bureau. Whoever they might have a relationship, or their bank has a relationship, they might just pull TransUnion. So if you just have Equifax frozen, you're absolutely correct. It's not going to affect TransUnion. They'll still be able to obtain and get a score. So you'll have to go to each bureau individually and get that set up.
And you were seeing now, and I heard yesterday that the IRS is not renewing their contract with Equifax. Now, it's not that they need their credit, but they hired Equifax to pull certain data to help the IRS out to follow information. They're not signing again with them.
Right.
So that's a big contract that they lost. Somebody else will pick up.
Mm-hmm.
But it is an issue to something to pay attention to. What are some other ways besides freezing that a customer can monitor their system?
Yeah. So there's credit monitoring available. You're absolutely right. So one thing Equifax did point out as soon as this breach happened is they were obviously offering free monitoring service. And so what monitoring does, it allows the credit to be pulled, but then it notifies you as the borrower, as the consumer, immediately that somebody has accessed your credit. And so it's happened, and so it's there, and so you're comfortable with it. Or if you get notified and you haven't applied for anything, something is up. And so it kind of lets you be a little bit more proactive. It's just, like I said, we don't want to steer anybody in one direction or another. It's just more knowing your options. If you're comfortable with that, if you're a little more savvy and you're able to get onto your computer a lot and you check your information all the time, that's perfectly safe, because you're going to get notified. If you check your email once every 3 months and you never check your credit report, do the freeze, because that's just going to be the best way. Otherwise, stuff's going to get too far down the road, and you're going to be out of luck, pretty much.
I had a issue probably 6-7 years ago in my credit report. Something was reported incorrectly, and the company offered me the monitoring, and I have been doing it ever since. And I've paid for it myself. But just like you say, I don't have to freeze it when something happens, because I look at my emails every day.
Right.
I get notified. I'm able to say, yes, that's me, or no, that's not me. Once a month, I get any other upgrades that happen or what's going on with my score. So it all comes to me at a pretty reasonable rate for the entire year. So that's one of the reasons why I haven't chose the frozen, because, like you mentioned, if you freeze Equifax, they're doing it for free right now.
Right.
But Experian and TransUnion, they're charging you to do it.
Absolutely, yeah. It's not their breach, so they're not.
A large portion of our customers now, when we're doing the credit reports, one of them will be frozen, and it's Equifax. So I have to have them go back in, unfreeze it for a 24-hour period of time to pull it.
Right.
Well, that cost them twice. Cost them once to unfreeze it, and again, it cost to refreeze. So it's something to think about what the cost is. Is there another way to make that work?
You're listening to Your Money Matters right here on Haystack Help Radio. Adam Pope is with us. Again, if you've got questions about credit, the bureaus, anything with mortgages, 303-477-5600, or shoot us a question on our Facebook page, Haystack Help Radio. We are live there today, thanks to Cassie. When we come back, Adam, I want to ask you about this, because I hear a lot of people that try these credit repair companies. I want to see, are there legitimate ways to get bad things off of your credit when that information is correct? We'll be right back.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code Radio50. 303-325-2776. That's 303-325-2776.
Affordable Interest Mortgage still has rates in the mid-threes. Do that upgrade that you've been putting off, or pay off that high interest rate debt, or just get ready for the holidays. Purchase your next home with only 2% down and no mortgage insurance. Take AIM, Affordable Interest Mortgage, 720-895-0500. We all know rates are going to go up, so why keep putting it off when you can borrow money in the threes? Do you know paying mortgage insurance is like adding 1.5% to your current rate without the tax deduction? Why? Take AIM, 720-895-0500. Call now and find out how to pay off your home faster, save over $100,000 in excess interest that you get to keep, all without changing one penny of your spending habits. Take AIM, 720-895-0500. VA loans to 100% with cash out in the low threes. We've been serving Colorado since 2001. Where it's all about you is not just our motto, it's who we are. Get the respect you deserve. Affordable Interest Mortgage, 720-895-0500. NMLS 298191, regulated by DORA, equal credit lender.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analyst is an official Haystack Help registered company.
Tired of walking into gun stores and seeing the same guns everywhere you go? Check out our sponsor, Old Steel Historical Firearms. Hi, this is Scott Watley of Sportsman of Colorado. At Old Steel, they specialize in the purchase and sale of historical firearms. Need to get your firearm collection appraised? They can help. Buy, sell, trade, and consignments are welcome at Old Steel. Open 10 to 6, Monday through Saturday. Old Steel Historical Firearms is located at 12 East Girard Avenue in Inglewood. That's just 2 blocks north of Hamden off Broadway. Now you can own a piece of history at Old Steel Historical Firearms. Call 720-662-7252. That's 720-662-7252. Check out their website, oldsteelguns.com.
Hi, Dan Johnson with Lynn Lau Chevrolet. We have rows and rows and rows of reconditioned pre-owned cars, trucks, and SUVs. Heck, over 200. We can finance anyone, and we have used car rates starting in the twos. Lynn Lau Chevrolet, I-225 in East Colfax, or on the web at lynnlauchevy.com.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio. My name is Scott Watley, along with Kurt Rogers. Adam Pope is our guest today, talking about credit. So again, if you've got any questions about credit, the bureaus, we can help you today. 303-477-5600. This is a special edition of Your Money Matters. So Adam, before the break, I talked about credit repair.
Yep.
Don't want to spend a lot of time on it, but is there a way to pay these companies to get legitimate information off your credit bureau?
So the only way to go about that, really, or the only, I don't want to say ethical, but ethical way to go about that would be to get them to agree. So if you've contacted that collection company, and we'll see it a lot in our world with medical collections especially, because those aren't necessarily folks who have been responsible with their funds. It's just a tragic, something happened and they got put in a bind, or their insurance didn't pay the bill like they were supposed to, and it's an unfortunate situation. A lot of times those companies will negotiate to say, look, if you pay me this $500, we'll take this off your report for good, and get it in writing, and then you can take it to the bureaus and get it off of there.
And that's true what you just said, get it in writing. If you make a settlement with someone, if you go, hey, owe you $1,500, if you'll take $800, we'll take it off your report. If they tell you that, you better get that in writing.
Absolutely. Yeah, that's the only way that you're ever going to be able to prove anything. And then you can take that information to the bureaus. You can, if you're in the process of getting a loan, with Kurt, we have a sort of a fast track to the bureaus through a rescore model that we can utilize for that as well. But what you see a lot out there, and we could see it when we look at the reports, is you'll have a customer with 4 or 5 derogatory items, and every single one of them is in dispute. And they'll go to a credit repair company, or maybe they heard about it from a friend, I don't know, and do it themselves, and just dispute the heck out of everything, because the bureaus have 30 days to investigate any dispute. If they don't get a response from that creditor, the trade line has to be removed. And so I think they just dispute over and over and over and over. Yeah, and then they can put it back on. So yeah, they'll and that's what happens a lot more. Is Kurt will get a loan, and the borrower will say, well, I thought I took care of this 2 years ago when I refinanced, and it's because it legitimately got off of there in the first place, and the creditor caught up to what was going on and then just started re-reporting it. And so the only way to truly permanently get it off is interacting direct with that creditor, being upfront with them, and getting in writing with them in your agreement.
So any red flags if you say, hey, you're thinking about hiring a credit repair company? Yeah. Any advice?
Yeah, definitely don't pay up front. They're not legally not allowed to pay up front. The bureaus won't even work with them directly. They don't really care for their line of work. That's not to say there's no legitimate people out there in that world. I don't want to bash
usually you
that.
have to sign something giving them permission to act on your behalf. So they write those dispute letters
on your behalf. Yeah, they think they word them a tricky way. They put them in there at certain times. They're just trying to find loopholes, and not necessarily clean it up. And so, and that's why the bureaus don't really appreciate them. If you go the other way, you're involving every party. You're involving the borrower. You're involving the bureau, and you're involving the creditor. And so there's no reading between the lines. There's no gray area. It's all straightforward.
Yeah, a lot of the times, and I've dealt with several of these credit repair companies. They have the greatest intention, and I agree with you. You don't pay up front. But there are ways that if you would sit down and pick up the phone, because on your credit bureau, you can get the address, the name of the company, and the phone number, and you could sit down and call them up. And if it is a legitimate one, you can dispute it and it goes away. But like you also said, it comes back. Yeah. And I've seen it come back 9 years later, because there's this 10-year window. That they'll leave it alone for a while, then all of a sudden they'll bring it back so they can reinstitute it for another 10 years. And those things can really cause an effect, because every time they re-report it, it's active as of that time frame and has the score problems that goes with it.
So technically, just so you know, so this is the rights of the borrower. So the debt could only be on there for 7 years from the first date of delinquency that led to the collection and or charge-off or whatever. So, for example, you had a 30-day late payment in July of 2012. and that eventually went to 60, 90, 120, 150. Boom, it was charged off. Then they could only report that debt until July of 2019.
Yeah.
Okay, and so that doesn't matter even if they sell it, because a lot of times they'll have it and then they'll sell that debt to a small collection company who's just trying to collect. They can still try to collect, but they cannot report it beyond July of 2019. And some of them will. They'll try. Everyone will try to bend the rules a little bit. But just so you know your rights as a consumer, keep these dates in mind, because those dates aren't listed on a credit report when that first 30-day was, especially from that long ago. And so you have to sort of know your rights in that aspect.
And sometimes that's hard to do.
Yes.
But when you do call these companies, you can try to work out, like you said, get it in writing and never throw that piece of paper away in case they decide to come back.
Absolutely. Yeah. Especially because if they misreport it or, re-report it down the road and you have that letter proving that it should be done and settled, you always have that.
Just because it got fixed doesn't mean it's going to stay fixed.
Yep.
Because I'll come back and they'll say, well, I got it. Well, guess what? You got to do it again. One of the questions I hear all the time is why, when somebody comes to me and I run their credit and I come up with a mid-score of X, they're saying, well, that other mortgage lender said their score was this, or the car dealership where I bought the car at says my mid-score is this, or the one I got from the free system says it's 9,412, some number.
Yeah, well, so 3 different answers to that question. So first off, if they come from another mortgage company and come to you, so nobody has a credit score on file. I know that it's misconstrued out there. A lot of advertisements, people trying to get free scores all the time. There's no credit score on file. You have a credit file with your data, and the score only generates when your credit is actually pulled, hard inquiry, you're applying for mortgage, so or any line of credit. But you go in and what that data shows that day, that very second, is what your score generates based off the algorithm that's put together with that data. So they can go apply to a mortgage company last week and then come to you the next week, and 5 different accounts could have reported in that time and updated. And that's why that score is different. Going to your question about, an auto loan, the auto industry uses a different algorithm than the mortgage industry does. So you might have the exact same data. You can apply for a mortgage and a house on the same day and completely get, and I would assume you would get 2 completely different scores, because they're going to be a little bit more lenient. And same with the free scores that you hear about all the time. It's important not to take those just for what they are. Really look at the data, make sure it's being reported accurately, and the scores are going to come out where they are. Everyone just has their own proprietary algorithms. There's thousands of different scores out there, so don't get tied in on one and thinking that's your score, because it's just not. It depends on the industry you're in.
And even the 3 bureaus, they can vary greatly, the scores from one bureau to the other.
Yeah, and I think the reason for that, and tell me if I'm wrong, Adam, is, you might have 5 credit cards, and 3 of those credit cards will report to all 3, but 2 of them won't report to TransUnion. Well, TransUnion score is going to be different because it's not getting the same data information. So when you get that free report, because you mentioned, look at it, see who they're reporting to. And if you have one that the score seems lower and they're not being reported at all, get on the phone and ask them to change that and ask them to report, because then you can move the scores up just by getting them to report equally across the board. It's the knowledge of understanding how the system works. And after our break, I want to kind of go over a couple things on more in depth on how to move your credit score and what matters to making your points matter.
Okay.
Because points are very important, whether you're buying a car, or whether you're buying a mortgage, or whether you're doing a credit card. So I want to kind of go over that over the next section.
We will do that.
Thank you.
You're listening to Haystack Help Radio. We'll be right back.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106. At Denver Home Navigators, we help map your course. It's all about you. Call me now at 303-506-0106 or visit my website at denverhomenavigators.com. I'm Pamela Meyer, the exclusive agent for Haystack Help Radio, and I look forward to talking with you soon.
Did you know that each and every day, 21 United States veterans commit suicide? Last year, active duty suicides surpassed the number of combat deaths. When soldiers come home, it is a huge adjustment, and they're often plagued with disabilities, such as immobility, PTSD, or a traumatic brain injury. You can help by donating to Freedom Service Dogs. This nonprofit rescues dogs from local shelters and trains them to become service dogs for these heroes. Help give back to those who have given so much. Donate now at freedomservicedogs.org.
At Lone Tree Veterinary Medical Center, we believe that all pets deserve to have a good life. And because we know that your pet will have many different needs throughout its life, we offer complete pet care services every day, all at one location. Whether your furry friend needs a checkup, advanced medical care, surgery, boarding, grooming, obedience training, food, care products, or toys, we are here for your pet 7 days a week. At Lone Tree Veterinary Medical Center, we know that you want the very best for your pet, which is why you can count on us to provide top-notch care in everything we do. We are certified with the highest rankings by the American Animal Hospital Association and hold a gold star rating with the Better Business Bureau. You and your pet can visit us Monday through Friday from 7 a.m. to 8 p.m., Saturday from 8 a.m. to 5 p.m., and Sunday from 10 a.m. to 5 p.m. We are located at 8681 East Lincoln Avenue in Lone Tree. Learn more about us by visiting our website at lonetreevet.com or just give us a call at 303-708-8050.
This is Scott Watley from my friends at Rampart Firearms in Sedalia. This is a great store, family owned and operated. They buy, sell, trade, and consign firearms. You will find a great selection of new and pre-owned handguns, shotguns, and rifles. If you can't find the gun you want, Rampart Firearms will special order your gun at no extra cost. Found a gun on the internet? Rampart Firearms will do one firearm transfer and the background check for only $10 if you mention Sportsman of Colorado. Rampart Firearms, 720-468-0050. That's 720-468-0050. Located at Highway 67 in Santa Fe in Sedalia. Rampart Firearms open 7 days a week. 720-468-0050.
Got a question for the station? Email info@crawfordbroadcasting.com. Now back to Haystack Help Radio.
And we are back. You're listening to Haystack Help Radio in a special edition of Your Money Matters, brought to you by Affordable Interest Mortgage. Have any mortgage needs? Give Kurt and his crew a call, 720-895-0500. Today we are talking about credit reports, all the different things with our credit report you need to know, and all the different things we had with the breaches and all that. So if you got any questions, again, about credit report stuff, we are here to help you, 303-477-5600, or check us out on Facebook Live on our Haystack Help Radio page.
Like most people, I said we were going to talk about this, when they think about their credit and their credit history, they think in more simpler terms. I'm from Florida, and things are real simple. Okay, that's how I looked at it till I met you. When I look at it, well, if I have 7 accounts and I pay them on time, I should have a perfect score.
Right.
That ain't true.
No.
Not even close.
Correct.
It depends. Like you can go over this, but what are some of the key factors to helping me make sure that my score is as high as it can be without really studying the system? What are some basic things I need to do?
I'd say the 3 basics are going to be pay history. I mean, like you said, paying on time is probably the most obvious thing in the world, right? It's just like, well, eat healthy food and you should be healthy, right? The second would be watch those balances, especially on the revolving debt. So, and when we say revolving debt, we're talking credit cards, debt that you have access to $10,000. How much of that $10,000 are you using? Are you almost to the top? You have $9,500 and you're just paying minimums. Typically you want to stay below 50, even below 30 is probably the safest, just to make sure keep those balances down. So that's why revolving debt has a lot more impact on a score, because you're taking into account both pay history and your balance ratio. So how responsible are you handling with access to this debt?
Well, see, a mortgage loan or a car loan, your pay what you owe versus what the limit was, what you started is. That's going to be at 85 or 90 for a while. So it's
irrelevant. It's not calculated in the score.
You can't change that as quickly as you can on a credit card.
That's right. So the only thing that really matters there is the pay history.
Correct.
So that's what makes revolving sort of a little higher impact of an account when it comes to credit scoring. And then the third thing the basic would be just don't apply for unnecessary credit. Don't jump at every 10% off with store credit card deal that you can possibly find. Not that it's necessarily going to just damage you, but it could hurt you on inquiries. It could hurt you on average age of accounts, which is another factor in counting scores. And then it could just lead to irresponsible behavior, because a lot of times if you're buying a fridge at Home Depot, you're going to get approved for maybe just slightly above what that fridge costs. And so then all of a sudden that ratio is off. So that's why, be careful in choosing what you get, with debt out there.
I can give you a real life story on that one you just mentioned about applying for a card every time you come in. I had a client about a year ago that they had 17 credit cards. About 4 of them were 5 years old. Mm-hmm. The other 12 were not. They came into some money from a bonus. I said, if you pay these down, we can move your score 77 points, and your rate will go from here to here. They said, fine. They took the money and paid it. But the husband, after he had paid those, had gone shopping. And he walked into a couple stores, and because they gave him 10% off, he opened up 3 more cards, where his score only went up 40 points because of the life average of his cards.
Right.
And because they said, here's $500, he charged $500. He took away all the advantages that he had. And it ended up costing him, because of the rates, about $7,000 in extra fees because of his credit score. I looked at his wife and I said, he kind of does this all the time. She said, yeah, don't take the 10% because it costs you a whole lot more.
Yeah.
Not because you don't need them, because you figure out what you got, what works. Mm-hmm. That 10% is costing you a whole lot more over here on the larger ticket items,
right,
than it is on those credit cards.
That's exactly right.
What about if you have a card, let's say, use your $10,000 example again. Mm-hmm. Let's say you put everything on that card, but you pay it off every month.
Mm-hmm.
Is that?
That's good. So from a credit score perspective, this is somewhat of a flaw in the system. So what if you happen to go pull the report and there's 8,000 on it, and it's the day before you happen to go pay that card? Your score is going to be significantly different than if you waited a few more days.
Yes.
And had it showing at 0. Now, last year, and when we talked about it on this show, there was the trended data that came out that's supposed to be now displaying your past 24 months history, so they can get an idea of, is this person trending? Are they a transactor or a revolver? A transactor is somebody who does just that, racks up a credit card, pays it down, racks up a credit card, pays it down. Or they're a revolver who, has 5,000, pays the minimum, adds another 2,000, pays the minimum. And so obviously the transactor is less risky. Mm-hmm. That hasn't hit the scoring yet. It's hitting the underwriting tools and stuff that Kurt uses. It hasn't hit the scoring system yet. I imagine that's something that will be coming, though. If you are in that instance or in that arena, ask for an increase in loan amount or in a credit limit. Because they'll look at your history, they'll see that you're going to pay it off every month. So getting that extra, that way if you're paying 8 but you have a $25,000 credit card, that ratio is a little bit different. If you're consistently going to be charging up that same amount every month, so you're not pushing limits and putting yourself at risk for that.
Gotcha.
Is it the more? Some people believe this also. If I have more credit cards, my score will be higher.
There's some truth to it, just because within scoring, it's going to look at the overall limit ratio for how much you have available to how much you're using, but then it's also going to narrow down by each card. And so if you're really getting particular, and I mean, rarely would you need to do this, but say, for example, you had, one big $10,000 card or a $10,000 limit card and an $8,000 balance, but then you have 4 other $10,000 limit cards with no balance. Transferring the money technically should help you out somewhat.
That's the same money.
But that's just it would all depend on what else is going on in that report as well. So I don't want to say anything for sure, but yeah, it's going to look at both the overall ratio and then each particular account ratio.
And then the question I get all the time is inquiries. Everybody thinks every time there's an inquiry done, their score will drop 5, 10, 15 points.
Right. Anything in credit is really just dependent on what's that file. Is it a file strong enough to absorb an impact, or is it a file that's already weak and damaged and looking to get hurt even more? So, no, I mean, there's a rolling 30-day period when you pull credit that any past inquiry is not going to count from the past 30 days because it doesn't want you to, the system doesn't want you to not apply because sometimes it's necessary. And then those inquiries will start to count afterwards. But, the quick answer is no. If you pulled from another mortgage company last week and you're going to apply with you today, your inquiry is not going to impact.
It's like
the score
when you go
right
out
now.
to buy a car. It might take you a 10-day period, but if you're doing it all in the same calendar month,
right,
1 or 10, it's going to have the same effect.
Right. And they're all going to count, and it protects the consumer as well because it wants the consumer to shop. So they're all going to count. You could have 5 mortgage inquiries in a 12, 14-day period, and they're all going to count as one mortgage inquiry on the scoring down the road. But none of them are going to count initially on that rolling 30-day.
Mm-hmm. Kurt, you hear a lot with medical things. You talk to most bankruptcy attorneys. For the most part, a lot of people that file bankruptcy, it's because of medical stuff, not because of them
Large
just going
portion,
out and
yes.
buying things. So when you get people that come to apply for a loan, and that, let's say it's just medical stuff on there, do you have much luck with working through that when it's just medical stuff like that? Or
It depends on other things that are part of the credit score, but if you have medical, let's say you got 9 or 10 medical items, those items, if they're all $2,000 or $3,000 a piece, it creates a problem for the lender. But as long as the total is around $2,000 to $3,000, you're short here, the lenders understand that, and normally they don't come into play, especially with the new trended data. They're not necessarily counting them. There's a new regulation that came out that they can't report collections on medical and stuff anymore unless they can prove certain things. Because sometimes you'll have an insurance company that will file a claim, and then they're selling it to somebody else, and they're filing a claim on the same amount of money that they just purchased, so it's getting double hit.
Gotcha.
So some of those things have stopped from happening. So it's not quite as prevalent as it used to be about 6 months to a year ago. But in most cases, we're able to work around those things.
Right. And we talked about bankruptcy during the break, but a lot of times people don't want to file bankruptcy. They think they'll never be able to buy another house or buy another car, and I'm telling you that's not true.
That is definitely not true. I actually have people 1 year outside of a Chapter 13, while they're still in the Chapter 13, are able to buy a home.
Yeah.
It just depends on what's happened after that. If it's a Chapter 7, you have to wait 2 years, unless it was an extenuating circumstance, and it needs to be a big one.
Right. And let's go through bankruptcy. How long does that stay on your report? 10 years of bankruptcy?
Yeah, well, it depends. So Chapter 7 bankruptcies particularly are 10 years. And from the file date.
File date?
File
Okay.
date, yeah. That's the key component there is file date for those. 13s are 7 years, and 13s are structured differently where you're actually paying off.
You're making payments.
You're making payments on it. It's you have the income, but you've sort of overextended, and you can still make some payments off. 7 is lost a job, something much more severe, and you just can't pay anything else. So yeah, they're two different components there, but bankruptcies are probably the worst thing from a credit perspective that could happen to your score. However, everything credit-wise is set up to recover, and you could bounce back once those 7 to 10 years pass.
When someone has for example, a collection or a judgment, and they put that on the report, that has an immediate impact on the score. About how long does that have to go before that impact starts to wear off to whether you pay that collection or not? It's not going to change the score.
There's different tiers. I mean, the first 0 to 6 months are going to be probably your heaviest impact. Right. And then there's a second tier that'll run from about 7 months to 24 months. It's still there. And then beyond 24 months, it should have minimal impact. It will still impact. I mean, especially if it's your only collection and or judgment on there, it's still going to be your number one reason that's keeping the score down, and you're not going to achieve perfect until it's gone. But it's going to just, as time goes on, and the more positive history you build to combat that is just going to help. You can't go through a bad time, have a couple collections, and just swear off credit and expect to have good credit. Mm-hmm. Credit needs to be used to have good credit scores. You need to show and prove you're responsible. So obviously there's that initial shock of you're going through a tough time, but then you got to get back on your feet and get some positive stuff going, and then that's just going to help outweigh what that negative is doing to you.
And probably the biggest thing that is a pretty permanent hit till you take care of this tax lien.
Right. So it's funny because that was what came out in July from liens and judgments in particular. So there was 31, I believe it was, the state's attorney general that sued the bureaus some odd millions of dollars because they were saying they weren't verifying all of this information and posting on credit and hurting people. So there's 4 components, going back to the data breach: name, social, date of birth. It's not driver's license, but it's address. So name, address, social, date of birth. If they couldn't verify 3 of those 4 items, the bureaus were forced to eliminate it from credit. So and I don't know what truth to this. The number I've heard is 90% of all liens and judgments were taken off of credit reports. I still see them because there's plenty that can be verified in those forms, but the courts never kept that good of records. It could be legitimate, that person's debt, but they only had maybe 2 of those 4 factors, and so they legally had to take it off because it was too damaging to the consumer. So that's when, and we were talking earlier, it's an imperfect system with the bureaus, but they are getting pressure finally, from CFPB, other government agencies to clean it up and make sure they're doing their due diligence and making sure they're not misreporting because it's costing consumers thousands upon thousands of dollars if it's on there erroneously.
And that's kind of why we have the show, because I try to explain to people that, they want to get the best rates, but they have like a mid 600 score. Well, the banks loan money because of risk. The higher the risk, because of that pool of those scores have proven to have a higher risk, they're going to make you pay for that. But there's so many easy ways to move up the score. I moved up a guy's score 8 points today, strictly because he just went out and raised his limit from 500 to 700.
Right.
The score went up 8 points and saved him $5,300 in rate.
Yeah,
He went from
it's huge.
4 1/4 to 375.
It's huge.
8 points. It can be done, and it can be done relatively simple if you know where to look.
Yeah, and I think a lot of people just think, I'm high 600s, I'm good, I'm decent. But when you're talking about what that difference is there between someone 780, 800, I mean, the savings are
And it's
outrageous.
not that hard to get there.
Right.
You don't have to have a lot of credit cards to do it.
Right.
It just takes the ones you have and manage them appropriately, and you can get to that 780 easily.
I mean, Lynn Lyle, one of our sponsors right now, they call me the other day and say, hey, anybody looking for a new truck, whatever, their Silverado? Hey, it's 0% interest for 72 months. That's
if you
a lot
qualify.
of savings. Yeah, that's a lot of savings.
Versus
what I'm
2 or
saying.
3%
Yeah.
on a $50,000 vehicle.
Exactly.
All because of score.
Yep.
Adds up quick.
303-477-5600 is our number. If you got any questions, we'll take your calls. You're listening to Haystack Help Radio.
Attorney Kevin Flesh has the experience and the knowledge to get more than an apology from those responsible for serious accidents. Sometimes saying, I'm sorry, is enough.
Sorry about that.
It's all right.
But after a serious accident, I'm sorry just won't do.
Oops. Sorry about that. My bad.
When you've been in an accident and sorry just won't do, you need representation on your side that will get the job done. Call attorney Kevin Flesh at 303-806-8886. That's Kevin Flesh of Flesh Law at 303-806-8886 for a free consultation to find out if he can help you to get the compensation that you deserve.
Affordable Interest Mortgage still has rates in the mid-3s. Do that upgrade that you've been putting off, or pay off that high interest rate debt, or just get ready for the holidays. Purchase your next home with only 2% down and no mortgage insurance. Take AIM, Affordable Interest Mortgage, 720-895-0500. We all know rates are going to go up, so why keep putting it off when you can borrow money in the 3s? Do you know paying mortgage insurance is like adding 1.5% to your current rate without the tax deduction? Why? Take AIM, 720-895-0500. Call now and find out how to pay off your home faster, save over $100,000 in excess interest that you get to keep, all without changing one penny of your spending habits. Take AIM, 720-895-0500. VA loans to 100% with cash out in the low 3s. We've been serving Colorado since 2001. Where it's all about you is not just our motto, it's who we are. Get the respect you deserve. Affordable Interest Mortgage, 720-895-0500. NMLS 298191, regulated by DORA, equal credit lender.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam. 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical you'll see the difference. That's 303-321-1578, stackoptical.com.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
It's closeout time at Linlau Chevrolet. Right now, we have new Chevy Cruisers starting at just $13,900, or a new Chevy Silverado for up to $12,000 off MSRP. We have the lowest overhead, we have the lowest prices, and the best selection. Linlau Chevrolet, I-225 in East Colfax, or on the web at linlauchevy.com.
Rush to Reason with John Rush. Weekdays from 3 to 7 on KLZ 560.
Welcome back to Haystack Help Radio. My name is Scott Watley, along with Kurt Rogers from Affordable Interest Mortgage. Once again, Kurt's number, if you got any mortgage needs, 720-895-0500. Been great to have Adam Pope in studio with us, talking a little bit about our credit and different bureaus and all the different things going on that you need to know about your credit. And one thing we always like to do on our shows with Haystack Help is provide some things to look out for. So, what do we need to be aware of? And I'm telling you, the people in the IT world are great at making emails looking like Chase Bank. I mean, they get the logos, they get all the different things, they make them look, Kurt, where we think it's from a financial institution sometimes.
Well, I'll take it before we get Adams. Currently, what's going across the United States right now is people are wiring money to closes.
Mm-hmm.
And you've seen this on some news channels. There are companies that are monitoring your emails, and they're checking when you talk about anything about a title or a mortgage, and when they see that you're moving down, they will send what looks like the proper information to have that money wired to this account, and they'll give you all the correct numbers, and the consumer is sending the money to the wrong place. And they're losing. I mean, one guy lost $274,000. He wired it, and it wasn't the correct place. So title companies are setting things into place because it's not their responsibility if you wire it. It's not part of the fraud or the Fraud Act. So it's affecting people. So you are correct. There's a lot going on. You really need to pay attention.
Right. Give us some tips there, Adam, on what we need to be looking out for.
Yeah, definitely. So, I mean, it's known to go back to when this all first happened. There was a fake site. So Equifax had you go to their site. It's the only way to check to see if you're part of this bureau, by the way. I'll make a point of that, is directly through Equifax.com. There's a link right on their front page now. Check to see if you're part of the breach. You click on that, and what they're kind of kicking themselves for now, from what I've read, is they sent you to a different site, and then you have to put in your information and check if you're on it. That's the only way to go about doing it, But because they set up a different site, there was all these scammers that came out, created these other sites, and said, come to this site and check in if you're on it. It wasn't through Equifax directly, but they obviously doctored it up to make it look like it. And they were even capturing even more data, right? So that's sketchy on its own.
Wow.
In addition to that, or sort of to piggyback off of that, I should say, different phishing emails and phone calls, calling folks. They're usually picking on, the older community who maybe isn't so tech savvy.
Yeah.
in trying to say, hey, protect yourself, come with us, give us this information. Never give out any information online. Definitely never give out any information over the phone, because none of these institutions are going to be asking
ever going to
that.
call you.
Never get duped into that, because these, like you said, these IT criminals are getting so sophisticated in how they do it and how they can make it look and how real it is. It just gets confusing. But no legitimate institution. I mean, this goes to all. Anything, right? Bank accounts, hey, we noticed there's been fishy activity on your account. Give me your social security number so I can verify it's you. And never.
IRS, and of course that's been going around. We're going to come and arrest you if you don't pay.
Right.
So they don't call you like that.
Exactly.
No, they're
exactly.
going to
Just
knock
hang
on your
up.
door if they want.
Hang up. You can contact them directly afterwards and check to make sure it's something legitimate. And then on top of that, a more of a proactive approach, I would say, is just be diligent on checking your information. You're allowed one free credit check per year from each bureau at annualcreditreport.com. It's a site that's owned by the three bureaus. You can do all three at once every 12 months, or you can spread that out and just do one every 3-4 months, get them throughout the year. Make sure nothing new, suspicious is on there.
Yeah, look at it.
Yeah,
I mean, it's
look at the
important to
data.
Read what it says.
Yeah, don't get caught up in the score or anything like that. Look at the data and make sure it's on there. In Colorado specifically, we have legislation in place, Kurt, as you know, that the bureaus monitor our credit more so than any other state. Kurt has to pay more for credit reports, unfortunately. But what they do is they'll notify you via mail if you have any derogatory information posted on your report, or if you have 8 or more inquiries posted within a 12-month period, because that's deemed high risk as well. So if you get a notification in the mail and you didn't do something, address it immediately. Yep. So just be diligent, be aware. But
they
don't
have phone
panic.
numbers on that form that they send out.
Absolutely.
You can contact.
You can contact them, and then they'd open a fraud investigation. I mean, the bureaus, they'll help you through it, but, just be diligent, but don't panic.
Gotcha. And at the beginning of the show, we were talking about different ways to maybe protect, and you talked about freezing. And I don't know that we covered it all. You can either pick up the phone and call them, or there's another way you can do it for free.
Yeah, so 2 of the 3 bureaus. So Equifax, obviously, they're doing everything for free right now, but also TransUnion. They have where you can lock and unlock on your own. You sign up online, you clearly click a button. I was in there today. It says lock, unlock. I mean, it's so super simple.
Nothing.
Costs you nothing. Experian has the exact same service. From what I can tell, they're charging for it $4.99 for the first month, and then $24.99 per month afterwards is what it said on their site as of this morning when I checked. That may change, but those give you the control. Those services there, the free ones. If you want them to do it for you, if you're just not computer savvy, you call the bureaus direct. You set that freeze, and then you have to go through the different steps, PIN to unlock it, whatnot, when you're applying for a loan.
Great.
Thanks again, Adam.
Adam,
thank you for having me.
Great information. So thank you very much, Mr. Kurt Rogers. Thank you, sir.
No problem.
Cassie for running our Facebook Live, and Mr. Charlie Grimes behind the glass making us all work. All right. Thank you so much for joining us today. Check out our website, haystackhelp.com, and leave it right here on KLZ 560, and have a great day.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.